Good morning, traders, and welcome to the live trading webinar here at Bookmap. And today we have live trading with Scott Pulcini. We do this on every Thursday at 10 a.m. We go for about an hour to hour and a half. Scott will go through the markets, the futures markets, and some of the we go for about an trading activity that he'll be taking and his live analysis. You get a lot more from it's just not live trading here. This is why we have as a part of our Bookmap education, we have our educational course, then we have the live forward-looking analysis, and then we have the live trading to put all of these ducks in a row so that you can really learn about order flow and how to add that into your trading plan, and then learn from other professional traders as well, like Scott and like Jay Trader that we had yesterday. Okay, so it's also about you can listen or understand their mindset, their psychology, what they're looking at in the markets, their setups, their kind of attitudes toward the markets, and also their one of the most important things I think is their trade management. Understand not just entries and exits, but how they're managing that trade. That's lacking from a lot of education out there. So this is really a nice view into that. You guys know who Scott is. He's been trading for quite a while and was featured in a book by Brett Steenbarger. Anyway, he does offer mentorship and education. I'll put these links into the chat. He has a chat room, he has an educational course, a trading room, everything. So I got to go through the disclosures, and then we'll turn it right over to Scott. General disclosure: all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Live trading is in simulation, demo, paper trading mode, and strictly for educational purposes. Live trading executed in simulation cannot accurately represent realistic trading performance. The risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security nor lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. All right, Scott, are you in? Let me check.
Hear me?
Hey, there he is.
What's going on?
All right. I'm well. How are you doing?
What you said?
I'm well. How are you?
I'm good.
Yeah.
So like you
Okay.
just
We
stepped
missed
up.
you. We missed you last week. We had the Pro Trader webinar, but we'll make up for it. Um, it was options focused, so we'll make up for it. And we'll do a special event with you regarding your new setups and your educational course that you're coming out with soon. So be a good opportunity to go over that.
Awesome.
The Step Brothers setup.
Right. The sixth wonder of the world.
That's right.
Sixth wonder of my
I'm still taking credit for that. I hope you know. So anyway, I don't know if anyone wants to back me on that or not, but the important things I will take credit for when it's due. But anyway, Scott, if you can share your screen and we'll get started right into it.
Yep. Hold on 1 second here.
Oh, guys, I just you can see my screen here, and testing some new kind of indicators that are coming out. They are fantastic. Um, I'll just leave it at that for right now. I don't want to get involved in it, but we're going to be able to offer filtered heat map to really more expose larger players' activity in the order book. It's very, very powerful thing. So looking forward to sharing that with you soon. Okay. All right, Scott, we see your screen. You're all set to go.
All right, cool. All right, so I'm currently short ES. I was short off of this broken ice setup. So first of all, there's a Fed guy talking. He may be done now, but you know, I tell my room every 5 minutes is we're doing a different type of trade in there as well, a reversion trade, which is a little more based on the algos, like playing with the algo moves versus the big money moves. My position trading is more trading off of the big money type of trades. But what I tell them nonstop is when the new information hits the market, all bets are off, right? So it's like, yeah, we have our zones, we have our areas where, the reversion trade we're playing, so on and so forth. But when new information hits the market, when new information hits, new money hits. So when new money hits, they run over algos. So that's what you need to know. For the reversion trading, even for the position trading, a lot of times I'll still take the position trades, and I'll trail them based on new events, so on and so forth. But you're still risking when guys are talking. If you want to be conservative, just wait till they're done chirping, and then you can start to trade again. But he was trading, or he was talking. He may be done, and then looking at my Squawk channel, we got all the numbers coming up. 8 o'clock, which is 10 o'clock Central. That is an hour. Bank of America or Bank of England. 2 Bank of England guys are speaking too, so I don't know how much effect that's going to have, but just be aware of that. So anyway, while he was talking, there was a setup here. You see, there was. This wasn't quite threshold buy ice, but this was threshold for my thresholds stop runs. So I have certain thresholds for each market that I will trade off that event. So this is pretty close to a double whammy. A double whammy is when the dumb money pukes right into the waiting hands of the smart money. 700 is my threshold for ES. This was close. It was like set 640, but either way, this was a valid setup with the stop run. And as he talked, we were actually really close to the blue lug, and I was hesitating putting this on. There's a lot going against this, and we'll talk about the lugs like we do but it was pretty much right here. But based on the bigger picture stuff, I was willing to take this trade, and we'll go over that here shortly. But anyway, this did the usual move away, it retested, and then failed, and I got short. And then as this thing just broke down, a new setup occurred. So now you see here another 1,200 stops, close to 1,200 stops. That's this yellow zone. So what I can do now is, based on the new setup, I was short and my stop was way up here. I can trail my stop all the way down to just outside an ATR. The current ATR, average true range, is, and this is how we trade according to the dynamic volatility of the market, right? So 8.92, so almost 9 points is the ATR currently. So the way I trade is it's all based off of ATR and reactions to these zones. So I had my stop in ATR just outside an ATR above this volume event, and then this new one fired off, so now I was able to trail this down. So it's pretty much going to be a scratch. I'll lose a little bit if this pops back up. If this moves lower, I'm going to add to this trade because we actually do have new lugs now. We'll go over this. Hold on here. So you can see I was hesitant to put
December stock sell NQ 160 contract.
I'm not, these, you guys hear me every week, these lugs are the most powerful thing I've seen as far as support and resistance. Second most powerful thing I've seen in futures trading next to Bookmap and the SI indicator. So I rarely will go take a short into she calls them the big blue and big red. So those are major support, major resistance. But in this instance, there was a lot going for this trade, as far as this was a multi-day market profile composite, which we tried to launch out of yesterday, got back inside overnight, went straight down through it, and then outside of that. So that was one reason. And the other reason is these markets are in some serious trouble now as far as structure. So you can see here, this is what we call a fail breakout, one of my favorite trades. You actually had this, it was a fail breakdown at first. So we talk about in my room every day on how when something should happen and doesn't, the subsequent move the other way is a whopper, right? So this thing was a fail breakdown, and it did move up, and it looked like this was going to launch overnight, so on and so forth, and it didn't. And then not only did it not launch higher, then it came back right back down through this high volume node of this balance area, which told me this thing is going to zero. I'm being sarcastic there, but I think it's going to get smushed at least down into this major zone here. We'll go over what that is as it gets down there. But the bottom line is, this is what trading is, right? You come up with a thesis of what you think is happening, and then when you get, for me, when I get the real-time volume, which is the most important thing in futures trading, bar none. When you get that agreeing with your thesis, that's when you can fire on your trades, trade a little bigger, as far as so on and so forth. We talk about the risk management every day. We'll talk about it again today because I'll show you the spreadsheet that I'm using for the position trading stuff. But you want to control your risk, but it doesn't mean you can't put more on an individual trade. You always have to have a stopping point for the day, right? So you should only be risking 5 to 6% of your account size for the entire day, which means you can break up individual trades to 1.5 to 2% for individual trades. Well, if you see a trade that everything aligns, you think something's going to happen, then you get the volume events in that direction. You can trade, 4% on that trade, just knowing you basically have one more bullet left until you're done for the day if you're wrong on that trade, right? So I can tell you guys at the time when I got back in the business, right when I learned about Bookmap, and I was going to just trade stocks, and I started trading with SMB. I'm sure you guys all heard of them. They're out of New York. They're mostly stock traders, and they would teach their traders about you come up with your setups and your playbooks, and then they would literally ground their traders if they did not trade bigger size on their A+ setups. They would literally put them on the simulator the next day if they got an A+ setup and they didn't trade most of their capital allotment for that day. So it's very important when everything agrees, and we all know how confusing the markets can be, right? Especially the last couple of days, there's been 45 Fed speakers throughout the day. It's been ridiculous, right? So when you get a scenario, a perfect storm where everything lines up, what you think is going to happen, and then you get the volume events in that favor, you need to be able to trade bigger, right? So as long as you're not blowing, through your 6% risk for the day. So anyway, I will add to this trade. So I told you guys we're working on a new trade in my trade room. I'm not going to trade that on the public webinars. That is, it's a proprietary thing for my paid members, right? They get something additional. You guys are getting a lot just on these free webinars, but that is something that they get, as part of my trade room. But we had a member in there that came up with this awesome spreadsheet. So we're trading this ATR strategy here. But what's awesome here is he also put the position trading strategy. So I no longer have to guess at my prices or spend, as if you've been on my prior webinars, trying to figure out ATR, figure out, outside the ATR, random guessing a lot of times, just putting in orders as far as just outside an ATR. This is very exact. So you can see here, you put in your, and this is all available to my trade room members. Please don't email asking me for the spreadsheet if you're part of my room, you get the spreadsheet. If you're not, you don't. So 9.13 is your current ATR. So we put it on here. And then you put in the zone prices. Hopefully I don't miss this trade. So the top of this zone was 36.48 quarter. The bottom of the zone was 44.75. You see these prices, right? You put them in up here. And then it computes it down here for the position trading stuff. So
December iceberg by NQ 152.
This is stuff in there. So anyway, I can add to this trade at 36.34.71. So I round up on the entries. So 36.35 I can add to this trade now. And what's also awesome, based on the volatility, it tells me exactly how many I can trade based on my risk. So there's the risk calculator I can show you guys every week. Well, now it's like built in this. So you just put in your account size, what you want to risk, and it tells you exactly how many contracts I can trade for the risk I need to take. So for this particular trade, it's 23 points of risk, right? Well, yeah, that's a lot of points, but you just adjust your size. You don't trade the same size you trade if you're only risking 10 points, right? So this is telling me I could put on just under 3. I'll round up to 3 on that. So again, I think this is my entry right here, 36.35, right there. All right, so now I've added to that trade. My stop is in the same spot, right? Because I trailed my stop off of this entry based on this, and now I added, and the stop's in the same spot, right? So this comes back, I'll lose on this, and I'll pretty much scratch the first trade. If this keeps going, this is going to could be a month-making day. This is what you trade for. This is what trading is, right? All great traders have maybe 5 to 10 trading days in an entire year that makes their entire P&L, right? So it's basically, make a little, lose a little, make a little, lose a little, make more, lose a little more, and then you have this whopper day that you catch a trend A, and it makes your month, makes your year, right? That's what your goal is in trading. You're kind of treading water until you get this perfect storm. I don't like to use those words with the hurricane, especially with my mom that was right in the middle of it. Thank God she survived that, but it is a perfect storm when you can catch these moves and then keep adding and based on, and again, I'm not adding randomly, I'm adding based on volume events, and it helps me control my risk by trailing my stops based on them, so on and so forth. So now we got to look at some places where this market may, I may be getting out of some of these. If this moves lower, you see there's a couple spot gamma levels here. And I'm missing stuff in NASDAQ too, I know. I'm trying to look at these prices here. Let's look over here on this. So we're bouncing off baby lug right now. I don't usually get out of baby lug. They're just minor Ludwig levels. Unless it's confluent with something. There's really nothing here. Actually, I should have gone back and marked up the chart for prior market profiles. But we're basically looking at 3,600. So I only get out of the trade if we hit major areas. Well, I'll get out of portions of the trade in market profile areas, so on and so forth. But I get out of the full trade at the major lug and or an opposing volume event, right? So I'm holding this trade basically until we get down to 3,600. Or I get an opposing event. I may get out, I'll probably get out of half of these because I know how powerful spot gamma is as well. This is the 3,600 for the SPX, for the cash market, right? Which is equivalent to basically 36.16 in the futures. So I will watch this close. I'll probably get out of 4 of them here. If this comes down here and starts to bounce, I'll get out because I know how powerful these levels are as well. So my trading is very simple as far as, how I'm trading it. Trading off volume events, and I'm getting out. I know what's important as far as places where this market could bounce, and then I wait for those areas and I get out. If I get an opposing signal, I'm out of everything and or stop out. So, and I just let the trade work, right? You had so many traders, it's the biggest fallacy because it's so hard, because it's against human nature to be staring at this, watching this go in your favor. You think you got your next 3 months rent paid, and then you see this and you see it disappear, and you go through that emotional pain, and then you panic out of it, and then you cost yourself another 100 points down, so on and so forth, right? So you've got to learn to just sit in these trades. If you have rules, you don't have this internal conflict, and that's the great thing about that other trade we're working on in my room. This is a little more subjective as far as rules, but the reversion trade we're working on, it's literally you get your prices, you put your trade in, and you let it work, right? You do not touch it, and that's how the reversion trade is great for traders that struggle with getting out and stuff. If you can, because we trust it, because it works, and it works all the time. It's ridiculous. Guys trust it, and then they're starting to condition themselves to sit in the nonsense, right? You got to remember, these algos are 85-90% of the trade. So 85-90% of the time, they are whipsawing you in unimportant areas, right? The big money comes in, then they get smoked, and then they got to readjust. But other than that, they sense this stuff too, right? So when they know the big money's not playing, then they start their games, right? And that's whipsawing all the retail traders out of their trades. So we have where we want to get out of this trade. We have our potential targets. Let it work, and or a new event comes in, right? And that's it. Trust me, I know it's easier said than done. There was a reason I gravitated to scalping when I first came into the business, because it was almost impossible for me to watch this and watch this and watch this and think I got it and watch this and this, right? So eventually, it takes a long time to condition yourself, especially if you're watching this. So I tell you guys all the time, the number one thing you need to do is turn off that and just trade, right? If you have your limits set with your broker for the day, you can just trade, and you would be amazed if you just trade your setups, trade your rules, keep putting your trades in. Yeah, again, I say this all the time, you'll be aware of where you're at in the beginning, but as you trade and you're taking trade, then all of a sudden you forget, you're having a good day. You will be amazed. You'll pull up this thing. There would be days I'd be scalping and I would turn it off. That's when I finally took off as a trader, when I turned it off, because I used to have it down here. We talk about this. I know we talked about all this stuff before, and I'd just be staring at it. When I finally turned that off and I would just trade, I would pull up my P&L at the end of the day, and I think I'd be up like 50 grand, and I'd be up like $180,000. I'm like, wow, I didn't realize I was doing that well, right?
10-15 contracts.
So here we go. So this is kind of a weird buy stop area, but this is a new event. I'm going to draw this zone, and I will get out if this pops above an ATR above here. So this is, what I've been doing here is turning off these bubbles to help me see the price line, and you can get this price line. We talked about this last webinar a couple weeks ago. I'll show you that here in a second. I just want to get this stuff in here. So this was buy stops. You can see where it started down here, and you can see with this awesome sweeps indicator that's part of the Global Plus package. You can actually see the swipes of it and help you draw your zones as well. And you see the on chart red line for stop runs. So this is obviously very incredible information that you guys have that most of the trading world does not, and that is called an edge. Let's get this stuff in. All right, so I know the top of that zone is 36.40. I know the ATR is right around 9. Again, my old way of trading, I'm already going to miss this. How do I get out of this? So what I'm going to do here is I'm just going to put this in just outside. I don't know exactly what it is, but I know it's just outside 9 points. So I'm going to move this now down here. That's not. Okay, so what I'm doing now, so I'm not just guessing 36.40, 36.36. I go to my brand new shiny spreadsheet that my boy Jay Labrada set up for me for the room. Absolutely incredible. Saves me so much time. Actually, it's not there. It's even dummy proof. So if you start typing in the wrong spot, it tells you 36.40 is the top of the zone. The bottom of the zone is 36.36. Down here, make sure we have the current ATR as well. ATR is currently 9.36. 9.37. So that's going to be my prices. So now I stop at 36.50.31. It's just outside an ATR, 110% of an ATR. So I was pretty close with that guess, right? So we'll put that up there, put that up there. Round up on my stop, so 36.50 half, which it would be, is going to be 110% of an ATR just outside. I go just outside an ATR because you get these algos that snap it back at ATRs, so that's why I go just outside of that. If not, I let it work. And I can actually add to this trade as well because it's a new setup, right? So where would I add? Well, it's all right here. I would add at 36.25.69. I can still put on, if you want to round up, I can put on 3. If you're trading micros, you can, again, with this risk, if you've got different risk, you got to change this. But I could put on 28 micros or 2.76 contracts, round up 3 contracts at 25.69. Round up 25.75. So we'll set up another trade here. And I will add to that. So this is an example. If this thing keeps moving down, I'm going to have 3 different setups on, 3 different trades on, and I kill it. If it comes back, I'm going to lose a little bit. I'll pretty much scratch I'll make a little bit on the first trade. The second one, I'll lose a little bit, and I'll be out and I'll wait for my next setup. If this keeps going, you don't know what's going to happen, right? If you knew it was going to happen, then you would be rich, right? So you don't know what's going to happen. So you just follow your rules. This comes back up, it'll suck. I stop out, big deal. On to the next trade. If this keeps moving down, I'm going to have 3 trades on, and I'm going to kill it. So, and again, based on what I'm seeing here, that this thing could just get smoked now. And this is major bye-bye, in my opinion. Right? Same thing with Nasdaq. This is an official fail breakout. This didn't even move lower yesterday. This stayed in this 3-day, 4-day balance. Tried to break out yesterday afternoon. It looked like it was going to the moon. Overnight, gaps down right to the high volume node. This is where I think we're headed today. So we'll see. So okay, this is the point, right? This is what should happen. First of all, when this broke out, this should have done that. It didn't. Flipped the other way. Okay, so now on a fail breakout, this should happen. For some reason, if this thing can recover and get back up here, well, then you got to change your tune, right? This is all if-then scenarios. You got to be ready to pivot. So right now, I'm thinking that should happen, and it should, odds-wise, this should die. If it holds here, then probably play games, and then the subsequent move is going to be a whopper to the upside. So you've got to be able to pivot. You come again, guys. My gut feeling. I used to trade nothing but gut feelings. My gut feelings nowadays is wrong probably 80% of the time. Not my market reading, but my gut feeling. Like yesterday, I felt like that market was going to just rip, and then it came back and died overnight, right? So I do my analysis, and my chart reading is very good because you're just looking. It's not difficult, and once you learn it, right? Markets are in 2 states. They're either balancing or they're trending, balancing or they're trending, right? It's not hard to find balance areas and then understand how the market should react to them. So this is what should happen now. If this doesn't, then something like that is gonna happen the other way. So right now though, this looks like it's gonna die. I trade accordingly, right? All right, that was a lot of chirping. Any questions on all that?
Let's see. Not really. No, some comments, etc. Yep. There's a suggestion about, I don't know, putting your heat map down a little bit. Yeah, I don't quite get it. Yeah, 007. If what you mean there.
Putting my heat map down.
Yeah. You said to put your heat map a bit down to see your lines better.
Yeah, you just use the slider, right? So this is what I was showing you to help you draw your zones. And I've never used this price line. When I first started Bookmap, when I was trading the stocks, 2017, wherever when that was, this was on the chart, and I'm like, this is really annoying. I don't like that, so I took it off. And then I completely forgot it was there. And then someone in my room, this is what's great about having a community. I mean, you have the Bookmap community, you have my trade room. It's like you have all these different inputs, all these bright minds. That, I can't tell you how many guys in my room have helped me, like just with the spreadsheet alone. But he told me, hey, you can have the price line on here. So anyway, you right click, you go to configure visible components, and then pick last price, and that's going to show you the actual line. It helps you draw your zones because when you have your bubbles. So I've been drawing zones wrong for years. Who knows how much this has cost me. So I would draw a zone. So say it would be right here. I need to do it actually, but right here, I would draw the zone below there. Well, the price actually stopped right there, right? That makes a difference, especially with my strategies. So it's like I was drawing zones on the bubbles versus the actual last traded price, right? Because the bubble, sometimes you can see this bubble goes lower than the actual price. What were you going to say, Bruce?
Yeah. No, I mean, it's the center point of that bubble is where
right.
Those in it, and it's also can be VWAP related depending on your zoom. I mean, very, very small VWAP for a very small time frame. But anyway, no, it's the you can also dim the heat map, Scott. So if that heat map, yeah. So if you don't have to go all the way down, but if you want to, somewhere in between half. I think by default it's actually at the half level.
Yeah, I mean, I like it brighter, but that's just all personal preference, guys. I mean, if my heat map's bothering you, I don't know what to tell you. I like it. I like to see the.
Yeah, that's what settings are all about.
Right. So. Exactly. All right, so you just see this just bounced off of this prior zone, not coincidental, right? And then I'm hoping this can do that. If this comes back, stops me, then on to the next trade. So what I was looking for is, I heard some stuff in NASDAQ. So another feature you guys want to do, right? So you want to have, if you go to File, Alerts, it brings up the text as well. So I'm watching 15 markets, right? So I hear it, but I don't hear it many times. So if I know something happened in NASDAQ, so I just go back and I'm like, well, what was that? When was it? Oh, it's 7:14. This is my time. I'm on Pacific. That's the last NAD. You see the copper. There's the ES stop run. We just get it off of our trailer stop off of. So 7:14. So now I know because I heard it, but I didn't hear it. Right. So then I go 7:14. Here you go. There's the volume event. Right. So that's really important to have up for me in case I miss something. So let's draw this zone. I turn off my bubbles. We got natural gas numbers coming out. Using my new hotkeys that Bruce never told me about. And then we got that. So that incorporates this here. I usually try to color coordinate. So I know what it is from my personal knowledge. This was buy ice, right? Buy ice isn't always right. That's why we have a broken ice setup. It's the volume event that is important because there are loaded up traders. Just think about it in common sense terms, right? Somebody was selling this like crazy and they ran into a mouthful of buy ice, right? So the icebergs are hidden orders. They only have to show a certain percentage, like 10% of the order in the order book. So someone came in here thinking they were going to whack 20 lots and they ended up running into 200, right? That's important information. That's what you have to pay attention to is the area. And then the way the market reacts to the area is the edge, right? That's loaded up traders that need to get the hell out of their trades when they're wrong, So let's see, did this get an ATR above here? ATR is 32.62. Wow, it's amazing. It almost went to an exact ATR and came back. Never seen that one before. Being sarcastic. This went up to
It's hard to tell when you're sarcastic.
well, that's why I usually say it, but are you being sarcastic or are you being
Oh, good Lord. All right, this is an endless spiral loop here. Forget it. I'm not going to say anything.
So you can see that was almost an exact ATR out of here. I don't know. Let's see what time it was, because you got to know at the time. For my strategy, you want to know exactly what was ATR. So 7:27:51. This doesn't give you the exact minute, but it gives you that 5-minute period. So you see if I go to the 7:25 period, look in the top left there, 7:25, and then look down in the middle. The ATR was 32.90. If you look middle left there. So that did not get a full ATR above it. I got real close to one ATR and then retested the zone. Meaning, because the way I trade these is if the market is able to get a full ATR out of here, it disqualifies a short for me. This did not officially get an ATR, so I can still put on a short. So that's what I was. That's why I was looking at that. Real close though. I mean, you want to split hairs? That was pretty close, but that's my. I got to follow my rules. I could still put on shorts there. Again, this is hanging on for dear life, this ES. It doesn't sound like I have the squawk on. I don't. Yeah, I guess he's still talking. 7:27, he's still chirping. So that was 9:27. So 5 minutes ago, as of 5 minutes ago, he's still talking. So, all right, let's see what else we heard here. I think there was some. And just pull this over. I'm not going to trade copper right now. I got enough going on. I thought I heard soybeans. This was before, maybe not. Just copper. You don't see this kind of. We'll look at it. You don't see that kind of size in copper ever. So something's going on major in there. And the other thing I've been noticing lately, which just obviously common sense, markets will be doing nothing. All of a sudden, you hear bonds firing off. My threshold for bonds is 500. You start hearing, not today. I'm sorry, like yesterday. You hear something fire off in bonds, and then all of a sudden, equities just rip. Right. So. Again, you guys, this is the greatest edge you can have in futures trading. I will say it 5 million more times in my days. So I'm not going to spend time drawing all this stuff because I'm not going to trade it right now. You definitely could, right? So this was this is a major, these are major stop events here, and then you got another one. You always want to revert to the most recent setup. You can trade off of that. I just don't feel like going through the whole ATR and everything else. We got too much going on here, so. All right, we'll just go over quickly some of the bigger picture stuff in these other markets. We already know equities are in serious trouble as far as what they look like it's going to happen. Remember, if they recover, the move up is going to be ridiculous. So just keep that in mind. So crude, been in a huge downtrend. Obviously, this is back in a very important zone, and you can see it's failing here. So I draw my zones on the 4 important areas of charting, which is tops and bottoms of balance areas, directional conviction, high volume node. I don't usually draw zones on high volume nodes because it makes my charts too noisy, because you can just eyeball it because it's just an area. It's not an exact price, right? It's pretty much the middle of a balance area, right? So like high volume node would be here. Wasn't good drawing there. This is a little guy. High volume node up in here. So I don't draw those usually, but I do draw. Like this was directional conviction. This was a selling tail. That's the 4th. Directional conviction is the 3rd. Can't think of the word. The 3rd form of charting, or the important areas of charting, and then buying and selling tails. So you had directional conviction, you had a selling tail, directional conviction, you had another selling tail. Tails are very important because it shows instant rejection of the area. So this area was important. So then we got down here at the time, this was important. You had buying tail, then you had a gap up this day. Gap, this is a regular trading hours chart, and I do that on purpose so I can see the gaps. Gaps are directional conviction. So this was that. Then we came down, held again, buying tail, directional conviction, buying tail, buying tail. Then you had a gap down from this balance area. Very important. That's this yellow, or this white zone. It didn't quite get up to that white zone. But you can see it came back up here after gapping down through it. First test back of this zone, and it's starting to fail. Right, so these are the areas. If you know your areas, this is the edge. You know your important areas. You wait for your real-time volume event, and you fire. There has been no volume event in crude so far, but if there is, I will definitely be looking for
NQ
shorts.
December ICE iceberg by NQ, 153 contracts.
Let's see what's going on here. I'm close to another fill here. So I'll add, but a lot of times if the setups are right on top of each other, I don't really add because that just means I have double size on from the same trade, right? I mean, this is far enough away that I'll do this. Again, you got to keep context in mind. I know this market has a very good chance of getting absolutely pummeled, at least down to the put wall down here. So I will add it to this trade. The one thing I did not look at was how close we are to the blue lug again, even though I shorted the first time. Yeah, blue lug's not. Yeah, I did look at this. 3,600 is the blue lug, so I'm not worried about that. So yeah, I will add to that trade. Let's go back to NASDAQ. See if we can get a trade on here, just so we can get loaded up and then watch it rip. Watch something happen and the usual bungee jump, screw all the shorts. 197. So let's do this again. Turn this off. You can see where this spiked, right? Started over here. I mean, the real spike was, it started over here, but this is only 59. I try to get the concentrated area. You could start it back there if you want, but the concentrated area is basically just use your crosshair up here from there and just follow along, follow all the prices basically to there. It's a nice, tight, small zone. There. Let's make it a different color so we don't get confused. So I don't get confused. I'm on the other setup. We do need hotkeys for the colors. That would be nice. And then that. So
NQ December iceberg by NQ, 162 contracts.
love drawn zones. This is basically the same area. This is probably the same house. I don't know. Yeah, you can see it here, right? Guys, I don't know what else. Like, this is incredible information, right? You just saw. So you see the first iceberg, you see it here, and then you see the iceberg on chart. This is one house that keeps buying them. They are now 400 deep with buy ice. That's what this is telling you here. And that is incredible information. I mean, the only people that have this information are like huge trading firms and funds and stuff like that, right? That disseminate the CME MBO data. This is incredible information. It's also important to know, hey, is this multiple buy ice from different houses, or is this one entity? Right? This is one entity. I mean, it's not crucial to know that, but it's just good to know. Hey, somebody just bought 400 by themselves or some single firm. Right? So let's just see if we got it. I'm just going to incorporate both of those. This one and this one. Let's see. Was this the same area? This looks like it went a little. It's the same exact price, right? It came down. They tried to hammer it, and they got a mouthful of ice. And they're like, "Oh crap, we're wrong." Boom. So this zone could be even condensed more, but I'm keeping the zone here because you can see this didn't go much higher on the spike. So I'm just incorporating both these buy ice areas here. I'm gonna get rid of this because we have 2 new events and it's giving me a headache. And here looks like the bungee jump's coming, so it looks like I'm gonna probably scratch this trade. We're still alive there. It won't be a scratchy there, it'll be a small loser. But all right, so now we're watching this. This may turn into, look, guys and girls, I think these markets are going to get killed. But the real-time volume is king. If they're going to get killed, then you should not be seeing bullish events. You should be seeing buy ice get smoked, right? This should not be, that means the big money is not hammering this thing, right? So yes, I have an idea what should happen, but I'm ready to pivot if this turns into a bullish setup. What makes it a bullish setup? If this gets an ATR above here. Right, so this is 63.75. We'll even put this in the spreadsheet. 31.28 is your ATR. 63.75. Let's go to our handy dandy spreadsheet. NQ. Let's put in our ATR first. 31.28. I can't tell you how incredible the spreadsheet is. I'm just going to keep talking about it because it's just. I owe Jay Labrada mucho. 1170, no. 111.63.75. Not the zone. The bottom of your zone is right where that iceberg was absorbing everything. 11159. So it saves me to come down here. Now I know if I go long, one ATR is basically 24 and a half, 24 and 3/4, right? And if I were going to go long aggressively, that's the price I would go. If I'm going to go short aggressively, that's the price I go short. But either way, this is where it needs to touch to get an ATR and 10% out of that zone. So if that touches 25, this is a bullish setup, right? Right, that's not right. Hold on. His ATR is 31. Yeah, that's not right. ATR should be 90. Should be like 94, 95, which it already hit. So that is a full ATR. What am I doing here? Why is this not? I did something wrong, I'm sure. 11,675. That's right. And then 59. Huh. So there's something wrong with this. If Jay Labrada's on this webinar, take a look at that, because that should be putting me in 98. No. What am I doing here? I'm reading this incorrectly. Because this should be the ATR, is 1198, but why is this telling me to get in at 11? I don't know. I'm confused right now. So we'll go back to that. But that 98 was the price for the ATR plus 10%. So this is a bullish setup, right? So now I look at my lugs. Sorry if that was confusing, guys. I'm confused myself. I don't know. I must not be thinking of something correctly there.
Was this user error, Scott?
It might be, but something's not right there. I may have put something in wrong. Jay Labrada, if you want to chime in on the webinar. I don't know what I did wrong there. First of all, we're at the blue lug, so I just made a mistake there where I take trades off of the blue lug aggressively. So I should have already been in this trade long at the 98 at that price, at this price. I just don't know why this is showing me. Okay, so 11,198 is which should have been my entry. So hopefully this will come back and I can trade, just say 2. This will be a hedge. I'll have dueling positions on, but it's kind of a hedge for my other trade. There's no, it probably won't come and fill me because markets don't like me sometimes like that, but this is coming back. So, I put myself in position for an incredible day. If it comes back, stops me out, I'm on to the next setup. If this comes back and fills me, I'll be long NASDAQ anyway, so it'll be kind of a hedge right there. All right, I'm filled there. So now my stop goes. So what that should be showing me is where my stop goes. I don't know what I did wrong here. 31.28. This all looks right. 73 points. This should have been my limit order. Oh, this is why. There you go, guys. User error, because I'm a moron. It's the zone top price. So I'm over here. So see right here? What a moron. 11, you can see I'm very easy on myself. So I was looking, this is where I should have been buying below, right? Or getting short. Or, I'm sorry. Just forget this for right now. Sorry. I'm going to look at this side. We're above the top of the zone. This is what I should have been looking at. This is my first time using the spreadsheet. Not. So I should be in at 11.98. So that was correct, right? These were pretty close. And then I stop out at. Is that right? What am I doing here? Why am I not computing this? Because this should show me my stop on the downside. I don't know what I'm doing. Sorry, guys. Sorry. there's something off there because it should be showing me where I get in, which that entry was correct, but it should be showing me my stop price ATR below this zone, right? So the ATR, let's just do it by hand, 31.55 below this zone. So that's 29. It's like 27 and a half, right? My stop for this trade should be 27 and a half. I think that actually just said that. Let's see. Let's see. No, that was right. What am I doing? Wow, Bruce. I think I'm going to start drinking. So this was right. I was thinking this was above this price. This is below. So this is exactly correct. I'm getting in. Computers are usually right. I'm usually wrong, right? So I'm getting in at 98 quarter, which I just did. My stop is at 11,124.50. I was thinking this was 11,224, and I'm like, why is my stop price above that price? Just because I obviously can't read numbers. All right, you got to take that out on the recording. Let's delete all that so people don't think I'm a complete moron. So 20, I'm kidding. You don't have to take it out. 24 and a half. All right, that was a lot of work and everything was staring me right in the face. All right, so you guys see what I did there. Spreadsheet was right all along, shockingly. I should have been long right there, the 98, and my stop goes down here. All the prices were in there. I just got confused with the handle.
Hey, Scott, I mean, this actually kind of brings up an interesting point. You know, we can write. I mean, this would be your own proprietary thing. I mean, you would have to probably like hire someone to write it. We wouldn't develop it for you unless like Sahi or the team, development team was interested in doing something like this. But automate that whole process and put the stops, everything in there for you.
Well, hell yeah. What?
I mean,
Of course.
yeah, of course. But I mean, it's going to be a little complex because the ATR, etc. We're not getting that reading. I'm not really sure where it's going to come from, but anyway, yeah, it's all very doable. But I really never thought about it until just now of like seeing the struggling here with it. Yeah.
Well, I'm struggling because I'm just an idiot right now for some reason. What threw me off is because I was on the wrong side of the chart. So this is the bottom of the zone, meaning I'm getting in here, I'm stopping out.
Yeah,
There's the zone. I was staring at this, and then this threw me off, and then it turned into a shit show.
Yeah. I mean, Jorge got back and said everything looks good here.
Again, computer's usually right. I'm usually wrong.
No, I think we can. I'm not sure how we get the data for the calculating the ATR. But calculating the number of contracts and whatever, that's easy. That's not an issue.
This is just a 14 5-minute ATR Wilders. So.
Yeah, I'm not sure how Bookmap would read that though. There's no time frame in Bookmap, but
I don't know.
Yeah,
you could import it from somewhere else too.
It's possible. Yeah. I just wanted to mention it. We can look into it later.
Absolutely, that would be great too. Because if we come up with something, I can offer that to the
I mean, why not?
The marketplace where people don't have to sit there and then you get the spreadsheet in my room, but like you said, it could be automated.
Yeah. I mean, it would be an add-on, and it would be on our marketplace.
Right. Great idea. All right, so sorry about that, guys. That was not good. All right, so really nothing else is firing off here. We're just sitting here watching paint dry. Did have this trade on in gold from overnight. My room knows this trade. We put it on. This was important, and this is another good example for chart learning, reading. This zone was extremely important here, and I'll show you why. Right, this is where you have to understand the bigger picture, right? So we came down here, gold, not too long ago, July, instant rejection out of here, right? And it was already here before, and you can see here back in. This is a year ago, same exact thing. Got here, here's your buying tail, right? And directional conviction. No time spent here at all, either one of those attempts. Then we come here, too long ago, and I told my room when this was happening, I said, something's up here. It's now accepting this area. It went instant rejection. Now we're accepting it and building balance, 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 balance. What did I just say? What are the two states of market? Balance or directional conviction. So you get loaded up traders, and then one side has to puke. There you go. So I already knew this was an important zone, obviously. And then it was an important zone from recency because this was the bottom of this balance area, right? One of the four important areas of trading. There it is. There's the balance area. So some of the best trades out there are when you get straight, huge directional conviction moves. This is definitely directional conviction without pausing right into an important area, right? So we know all that. And then when you get your volume signal, that's an A plus trade. Right at the close yesterday, there was a stop run. And I said, I'm putting this short on and I'm holding it overnight. And this thing literally touched almost to the tick at the bottom of the zone. Your stop one was right here and died. And now it's kind of, and I'm still short. So I had I'll stop out. There was a volume event today, and I trailed you can see where my stop was overnight here because this thing's been running all night. I trailed it down based on this volume event, and you can see it just keeps, guys, it's not a coincidence that this market keeps testing this event, right? This is it. This is the edge, knowing where these areas are. So anyway, I'm still short that. Now that I talk about it, you guys know how much I hate gold lately. Probably get stopped out, but I'll still make a little bit. I took off two yesterday. I'll just show you this here right now since nothing is going on. Totally wrong. Let's look at gold. So these are some of the areas that I get out of trades, right? So yesterday, this came down, so my short was right around, so the end of the day yesterday, right here, we moved back to yellow prior red area. I got out of half of those, and I said, I'm going to let half ride, either stop me out or a blue lug. Still hasn't gotten down here, but it's trying. So it's that or a new volume event. And then this morning, a new volume event came in, and I trailed my stop based on the new volume event. And then I hold the trade. So it's either that, or I stop out, or another volume event. Then I can trail my stop. So that's the gold trade. And I just stopped out of my ES, so I took a small loser. It was half of my risk, what I usually risk on a trade. So that sucks, but we are long Mr. NQ. And again, I didn't. It's not like I put this Nasdaq trade on because I was afraid of the ES ripping up. I had an event that was a bullish event, right? And there you go. Not a coincidence that it stopped right there. Actually, I take that back. That was already here. But the way we took this aggressively because we bounced off the blue lug, right? That's why I took this aggressively. Otherwise, I would have been waiting for below the yellow lug. Right? For below the yellow lug, I wait for the volume setup. Then I wait for a retest failure. This one I took aggressively out of there because of we bounced off the blue lug. That's how powerful those lugs are. But we got a volume event at the blue lug, so I took it aggressive. But normally I'd be waiting for this. And this still is probably going to happen. Trust me. Watch it all day, every day. But the way we're long that, I lost a little bit in ES. And I went for the throat, right? I added to that trade. And I was going to add again. So speaking of which, let's cancel this. But, I went for the throat here. And if this is trading, right? I took a small loss. If I'm right on that thing, I make 10 grand plus probably, right? So it's like, that's what you're looking for. You're looking for that big outsized move. And, I took a small loss on to the next one. And then eventually you're going to get the trading day. And that's one of the 5 to 10 days for the year that's going to make your entire year. And that's what trading is. If you think it's something where I just hear it all the time. Well, my goal is to, I want to make $500 a day. Yeah, average, you can absolutely do that. You can make 1,000, you can make 5,000 a day average. You're not going to make $500 every day. It's never, ever, ever, ever going to happen because that's just not how markets work, right? One day you're going to make 2 grand, another day you're going to lose a grand. One day you're going to make 3 grand, another day you're going to lose $700. That's trading. It's not a consistent income every day. And if you think it's otherwise, you're in the wrong business. All right. So no questions on any of that, and no questions on why I couldn't read numbers slapping me in the face, nothing like that, Bruce?
I mean, you're really setting it up for me to ask some questions that don't exist, but I'm not going to do that to you. But anyway, it could be good fun. No questions. We're all good, Scott.
Okay. So now you see where we're coming back to. This is an important area here. One, directional yellow, prior blue on the lugs. That's a confluent with. I love when the lugs are confluent with something. It's probably related, obviously. I mean, this is proprietary information. And I had a couple guys in my room. They're like, well, I can't, I'm not going to trade off of them if I don't know what they consist of. Listen, I never trade off stuff that I don't really know what's going on. But when you watch something work for a year and a half, almost 2 years, you stop questioning and you say, okay, they work. I have a strong feeling, and they're not pivot points. They have something to do with market profile and whatever else she uses. That's her thing. This is why they're proprietary. But I just know they work. I use the analogy every single webinar. When you walk in a room and you need light, do you have to unscrew the light bulb and break down the light bulb and look at the filament and try to understand why you're getting light, or do you just want the light? Okay, I don't need to know why these work. I know, or how they work. I know they work, right? So that's all I need to know, and they work exceptionally well with the volume events, right? And then even better when you get Love's volume event at important areas that we've been talking about this whole webinar. So this is another important area. What's the story for today? This market closed here yesterday, tapped down right in here, covered the whole thing. That's what markets are supposed to do. That's the tendencies when they enter back in a value area, market profile composite value area. This is a 3 or 4 day value area. The tendency is to get to the other side. Well, this went straight to the other side and down through it. Now what are we doing? All we're doing is retesting back here. So if I got a volume event right here, that in my mind would be an A plus trade, especially confluent with this stuff. I could trade double size there, right? So this is what I'm talking about. If you're just patient and you know your areas and you know what to wait for, then you're like a sniper sitting in the weeds. You wait, and then now you're like, okay, so you see, I'm not putting on a trade just because we're here. I still need my main driver, my volume event. If I get it, then it's go time, right? And, for some reason, if this can get back inside here, well, that's information as well. In my mind, if this market, obviously, it's pretty it's common sense. If this should fail. If this gets back in here, something's up, and we're probably coming back up. And then that is what we talked about for this view. Something's up, right? These look like these markets should go to zero today. I'm exaggerating, but they look like they should at least move down into these areas. If this market holds and comes back here, I'm telling you, the subsequent move is going to be at least twice as long. Okay? So, but as of right now, like I said, what are we doing right here? I mean, the hour's not completed, but it looks like we're putting in a buying tail. Well, that right there is telling me, why are we putting in a buying tail when this thing has already shown that it should die, right? So that now I'm already on alert. Okay, I'm still short bias, but if this thing starts to do this and gets back up through this high volume node, this thing is going to do that, in my opinion. So, but as of right now, I'm still leaning short. And now I wait, right? Nothing's going on, completely dead now. I guess the markets aren't used to, 15 Fed guys not talking in a day. So maybe that's why nothing's going on. The last 2 days have been absolutely ridiculous. I'm talking 6, 7 guys both days. It's just, I never remember in my 20 plus years of trading, Fed speakers nonstop all day long. I just never remember that up until this last year. So. All right, so we're just waiting. Some targets here for the NASDAQ if this thing starts rolling up. Again, it would not surprise me one bit to see this come back and retest this volume event as long as nothing new comes in. My room should be taking advantage of that with our new strategy.
There's a question here from Adrian. Do you read important relative volume on the extended trading hours, like 7 to 8 a.m.? Sometimes the threshold goes to 400.
So that's actually one thing we didn't look at. I chirp about it every webinar. It's very important, right? You want to, absolutely. So we saw yesterday the market, and last night, actually, look at this relative volume. Guys, there's a reason this market did this overnight. You can do the same thing as far as this. Obviously, it's a much bigger zone, but this basically started here up to here. I'm following this stuff. Basically down to here, right? And it tried to hold. What is this? Well, these are just loaded up traders. That's what this is. Somebody was selling this aggressively. Well, somebody was buying it passively, but somebody was still buying it. So whenever you get the move out of here, that's the big move, and then you get the pukes. This is whoever took these orders overnight are like, oh crap, we're wrong. Puke, 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 puke. This is the same It's all the same stuff. It's just a different way of looking at it, right? Bookmap, you get the icebergs and the stops, but this is heavy relative volume for this time of night. You can see it's trading almost 5 times normal. You can bet whatever way this broke out of here was going to be a big move, and you got a big move. You got a 70-point move out of here. It's about 50 points, but still, it's a big move. So yes, absolutely. And the night before, there was the same thing. Let's see. This was during the day yesterday. Oh, wait, no, this was, what's the date today? Oh yeah, this was middle of the night. This was ridiculous. I don't know what happened yesterday or the night before last. You're talking almost 20 times normal volume. Something went down here, and you can see what happened when we got out of here. Hey, look, it did the retest and then launched. Right, so absolutely, guys, this is all the same. It's just a different way of looking at it. You just keep it simple, stupid. You're looking for areas that traders are loaded up, and when it gets out of there, think if you're the big trader here, you're like, oh, this market's going to zero. I'm going to put in 14,000 contracts and they can take them all. And then you get short and you're like, yeah, I think I got them. And then it does that. You're like, yeah, I guess I wasn't right. I need to get out of my trade. That's all this is, over and over and over. If you can identify the areas, knowing this, and then obviously you can even get more micro with the bookmap stuff, that's the edge. That's what trading is. I don't care how many damn lines you have on your chart. They don't mean a single thing unless the market, the real-time volume is agreeing with those areas. Period. That's where traders get. They're always looking for this magic bullet, this magic indicator. There is none. Yeah, some work sometimes, some work more often than others, but they're only working is if the real-time volume, if the real-time players are agreeing with that area. Period. That's it. That's what trading is. Any market, especially futures. Futures, we get this, get this information. You guys, every webinar, I came back. I was jaded from trading futures. I went from making millions to couldn't make $1. When I got back in the business, Dr. Brett Steenbarger, Bruce mentioned him earlier. He actually called me and said, "You want to check out this Bookmap program? Incredible. It reminds me of the way he used to view markets," because he sat behind me for a year when he wrote the book, Enhancing Trader Performance, to see what made me, how I was making so much money, like what I was doing. And he's like, "This reminds me of how you used to trade." The minute I saw this, I'm like, I'm back. And that was with stocks. And then they came out with this, and Bruce kept telling me about it, and I didn't, for like 3 months, I didn't even look at it. And then when I looked at it, I'm like, oh my God, this is the most powerful thing I've ever seen. I'm going back to futures. So leads me to the other thing. If you heard in the beginning of the webinar, Bruce said, when Bruce says certain things like with inflection about, or certain adjectives like amazing, you'll want to pay attention and you want to check out that indicator, because he does not say that very often, right? And that's how he was with this. And he kept telling me about it. And I'm like, yeah, I'll look at it. And then when I looked at it, I'm like, oh my God, right? Same thing. I haven't checked out these new ones, but I'm going to check them out. If he's talking like that, there's something behind it. That's all I got to tell you.
Yeah, it's a new thing. It's with MBO data as well. It's called Trader Map Pro. But you guys you'll get an earful of it soon enough. But it's pretty cool. You'll be able to separate out larger trades or liquidity that's in the order book, and understand the behavior of these traders. And it includes the risk. I'm sorry, it includes the spread. So for example, I was just testing it out this morning, and sorry to take away from your presentation, Scott. I just want to kind of,
there's nothing going on, so don't worry about it.
Oh, okay. I just want to kind of preface it in some of these ways, because it's amazing to see this. Like during what was it, at 8:30 this morning, we had a bunch of different things come out. What was it? Hold on a minute. At 8:30 we had the final GDP. So obviously the market's going to, and unemployment claims is going to be volatile. Well, you'll see the spread widen out with the liquidity of larger players, and the market went right to it. So this is going to provide you even more transparency into the behavior of larger players. There's a lot of liquidity in there that are just 1 and 2 lots. Being able to filter that out in a different view is going to offer something, I think, special.
That's awesome.
Yeah. You'll see more soon about that.
Cool. right, so I'm just sitting in this trade again. I will not surprise me. I already saw that one bit to see this retest the zone because that's what these markets do. Hopefully my room is involved in this trade. Doesn't mean it has to, but very likely it'll retest this volume event because it was a pretty major volume event. You had 400 buy eyes down here. There's nothing going on. You know, you want to always keep an eye on the relative volume, but there's nothing going on. So now it's algo time, right? And that's when they start whipsawing all these traders, right? And making them second guess their positions. This is barely at normal. 100% is normal. Look at ES. Look how bad this trade is. Actually, is this right? This isn't right. Hold on. I'm in the wrong time period. That's really bad. Still not great. I mean, it's not terrible, but it's still barely over 100%, right? So, remember, this relative volume chart is showing you the exact 5-minute period for time period for the last 30 days. So this is showing me right now the 9:05 or 10:05 time period for the last 30 days. That's what I want to. That's how I want to view the relative volume. So I think that's the most important way to view it.
ES December stock by ES 630 contracts.
All right, so now we got to do a bit.
December stock by NQ 155 contracts.
First and foremost, because I have a trade on in here. Now what can I do? Anybody tell me what I can do here on this new event? I'll let someone try to answer, and then Bruce, you can tell me. You'll be put on the spot.
All right, I'm waiting.
Anybody know? I have a position on. Here's a new event. What can I do with this new event? First and foremost.
Gold stock by GC 216 contracts.
I knew I was going to jinx that gold trade as soon as I showed it. Sitting in it for literally 18 hours. Is there any answer to what I'm doing with my trade here? Currently have not.
Bo says you can trail your stop.
Very good, Bo. You are A+. You get the A+. You're the teacher's pet for the day. Even more sad that none of my room members said anything. That makes me very sad. They all get Fs. All right, so the bottom of this zone is now, we'll actually just put the zone in to be precise. 29. Let's see if I can do this right this time. 11,229.75. Let's go to our spreadsheet. 11,229.75, and then there's a Bank of England guys talking, right?
Yeah, I wasn't going to interrupt you. Jeremy's been saying the BOE is they're buying, bailing out pension funds basically, and there's a lot of stuff going on.
Stock by BC 322
So that's why everything's firing off, right? That's why this is new information coming in the market. You got to be careful. The top of the zone was 11,236. Let's say 75.
December icebergs sell NQ 152 contracts.
All right, so it doesn't matter now anyway because we have a new event. So it's pretty close, but you could see the sell ice come in. It's 163. And also for my room, if you did take the trade I was just talking about, you should have known based on the squat that Bank of England guy was talking, and you had to be careful holding trades when guys are talking. Every day we talk about that. It's new information hitting the market. Again, I didn't know what kind of impact. Look at all this sell ice coming in here. It's not a ton, but I've seen this wave stuff before. There's probably a lot behind us. Anyway, it's new information coming in the market, and you get new money in the market. All bets are off. You got to be aware of this stuff if you're trading. Period. Right. All right. So this is the new setup.
NQ December iceberg sell NQ 151 contracts.
So I keep doing this, and I keep forgetting to use my hotkeys too, so I get an F. Try this again. Remember, I'm trailing based on the new setup. So this, didn't I just say this was I've seen this before when you see this weird wave. This is gonna keep coming in here. You watch. This is probably gonna be like 3,000-4,000 nights when this is all said and done. This happens like once a month lately, where you'll see wave, 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 wave. I posted, go to my Twitter feed. This exact thing happened. That's what's here. If you saw here, we only moved about 1,000 points away from this area after I posted it, by the way. right here. This wasn't the wave as much, but this is 4,000. This is September 21st. Tell me what happened after this one. This was like 4,500 ice here, 4,500 plus. All of this just kept coming in, kept coming in, kept coming in. The Fed came out, it did do this, it popped above here a little bit, and then it just got killed over the next week, 1,000 points. It's kind of important information to have, right? All right, maybe I should stop chirping and put in my stop here. So this looks like it's basically the bottom of this zone here. This latest setup. Now, this was the last threshold setup. Let me get rid of this stuff real quick. I'm trying to draw the most recent stuff here.
Interesting output there on the ice. Very interesting. So obviously you're having it reset at 1 minute there, but they're very consistently selling in there.
Yeah,
very consistently selling.
That wasn't really threshold there, so I'm just going to draw this. I'm sure it's going to keep coming in here, but I'm going to draw based on this last spike here. So I'm going to draw that, and I'm going to change it so we know it was sell ice. And then I'm going to trail my stop. I'm going to put my values in, and then I'm going to trail my stop on this long based on this.
I mean, clearly an ice algo.
Right. 11,240 is the bottom. 46.25 is the top. 11,40. 11.25 is the top. TR is now 31.87. Down here. Let's see if I can do this correct. So I would be stopping out. I'd be getting in, if I'm getting the position, I'd be getting in at 1281, but we're just looking to stop out from the bottom of that zone so that I can stop out at 1205. So I'm basically going to scratch this trade if it comes back. Right, so 1205 shows me just outside an ATR from the zone. So instead of trying, right, it's an ATR plus 10%. So trying to figure that out in my, I can do it by hand, but now I know the exact price. So I know I'm stopping out right here based on that spreadsheet, right? So then if I get stopped out, this is a whole nother, if this stops out, this will be a full ATR below here. Then I could actually what I can do here, because we're below the yellow lug, I can add to this trade. I can trade this aggressively. So this is what I'm going to do here. I'll show you here in a second. So I'm going to stop out and I'm going to enter the short aggressively based on this new setup, this black zone. Why am I doing that aggressively? Because we're still below the yellow lug. And I take my trades aggressively out of the zone, meaning just outside of an ATR plus 10% outside of the zone. So I will take that trade here, and I'll watch closely at this blue lug. Blue lug's kind of close, but it's still 50 points away from where I would enter. So I'm willing to take that trade. So we'll see. But what just happened here? What did we just talk about? This is actually, I should be trading double size here. A plus area, right? Literally just came back up here. It's failing. Yes. I'm actually missing a trade in there, I'm sure. Maybe I can get over there in time. This was the same thing. We just talked about this. This is an area. See what just happened? What's the story you see? We already know that. Try to get inside, failing again. We already know it looks like it's going to go to zero today on the structure stuff. So this is a great short opportunity. I'll probably get stopped out of that long in NASDAQ for a scratch, but I will be short then. I'll find the market here. All right, so let's see what just fired off here. I'm sure I missed something. What was this? Is this a unicorn step right? Yes, it is, almost. Right, let's get rid of this. This happened in the same area. I think I'm missing a trade here too, but it is what it is. It's really hard in webinars on one screen to catch all this stuff. But you can see here, you had buy stops. This was threshold 644. That's this here. And then there was buy ice with buy stops. This is called Step Brothers. Bruce claims he came up with it. I don't believe it. But it's the sixth setup that's coming out. That'll be in the new course. So let's get this one.
I may put a poll in, and if your students can verify that.
I'm telling you, somebody in my room came up with it. I'm telling you.
I don't know. I'm going to put a poll in.
Do the insert. You see that new commercial? I can't remember what it's for, but they stop stop where they're at and they call for a replay, and the guy comes in with a with like a little monitor, and they look back at the incident to see who was right or was wrong. Funny.
No, I haven't seen it.
It's like an insurance commercial. It's pretty funny. All right, so that's the, yeah. So I make it unicorn color. I think this is pinkish, purple, pink. I'm colorblind, so I can't really tell, but I know it's a pretty color, like a unicorn, because you don't see it very often. All right, so that's that. All right, so we're still alive in this one. Let's put our values in. Top of the zone was 63. Not surprising, it bounced right off that spot gamma level. The bottom of the zone was 57.25. 63 and 57.25. Go to yes. 363. That's not working. Hey, look, the dummy. There's a dummy. Why did that happen? I'd say 36, 57.25. Then ATR is 9.28, pretty consistent today, right around 9 all day. All right, so I could short at 36.47. I round down, actually I round up. I can get up at, I'll just get in 47. And then my size is 2.6. I'll round up, put it 3. All right. So this is going to suck getting it right in the middle of a zone. You could put it a little outside here. I'll just do that because I'll risk the extra 3 points because I don't like entering trades or stopping out in the middle of prior zones, right? You see, I mean, you see this zone was important. It bumps right off of here, right? So I'm going to force this market to get through this zone before I short it. So I'm willing to risk a couple extra points on it. That's what I'm saying. So that is set up. I think we're already filled on NASDAQ. So I stopped. I basically scratched that long, and now I'm short, I believe. Yes. Okay, so now we're trading off of this zone. Instead of trying to figure out ATR and then look, where the zone is, I already have this stuff inputted on the spreadsheet, right? So I just go over here. So I know on the top of the zone. So I shorted here, and I stop out at 11.12, 11.281.50. I round up, right? Do I have the right size on? Yes, I got a 2 lot on, and I'm risking 76 points. Guys, this is just adapting to the volatility. I don't like risking 76 points, but based on my strategies, so we have to risk. So that means I can only put on 2, and I'm risking that amount, and I stop out at 11.2150, 281.50. So my stop will go up here. I don't like there's liquidity up there because we know how those are magnets, but that's not part of my trade plan as far as whether I put on trades or not. So there you go. What I will watch closely is this area. This is the blue lug, right? If this can't get through here right away, I'm going to get out of this short. And that's that prior zone too, which I'm sure it's going to go revisit because that's what these markets do. Let's get this back to bubbles. All right, so we're short NASDAQ. I will reshort S&P. So this is how it works, guys. Like I took a shot. If this thing would have died earlier, I would have killed it. Lost a little bit, new setup, right back in potentially. That's how it works. I of course jinxed my gold trade. I knew the minute I showed that I would get stopped out, and I did. And let's see if it's to the tick as usual. Had this trade on for like 18 hours. Stop us right in the middle of this swipe, shockingly. So you did have 500 stops, 300 stops, but I don't trade stops here anymore. Usually, I trail my stop on my position, but I'm entering positions only if I see ice. This market, they've got to be the worst traders on the planet. It is nothing but stop runs back and forth all day long. But when I see ice, then I pay attention and I'll trade it. That's that. We'll short that. There is nothing else going on. I cannot believe there has not been one setup in crude today that I've heard. You see what's down here. So crude, you also want to, we already talked about this a little bit, but this is failing, and this is potentially failing in this zone, right? This is important. This comes back down here and gets to this high volume node, then we're coming down to this area. This was a really, really important area that I had here for like 2 years. So it was resistance, resistance, resistance. I'm not going to go back for 2 years and show you all that, but just know this was a really important zone. Now, if we come to it, it's support. All right, if it gets back through it, then back to resistance. That's about it. Any other questions, Bruce?
Let's see. No, I think we're let me check Discord. No, we're good.
All right, so what I'm watching here, I'll stay on a few more minutes up until probably 9:30 for your other guy that comes on, Tom. I'm watching this closely, this blue lug. I know how important these lugs are. And technically, I took that trade aggressively. I shouldn't have. I'm lucky I scratched it. I wait for actual tags on the blue lug. I had this too scrunched, this chart too scrunched. I wait for actual tags to get in aggressively. This didn't tag it, so I should have waited for retest failure of that first setup. So I kind of made a mistake there on that entry. I mean, I scratched it, didn't matter. But anyway, when we come back here now, I'm watching this area very closely. Blue lug's at 39.75, and I also know that prior volume event was right there too. So I will be hopping out if it can't push through there. And I'm really watching relative volume when it gets down to those areas, because if there's no relative volume, it's very, very likely just going to bounce right off of there. Right? So meaning I need to see, if I'm going to try to hold that trade through that blue lug, I need to see this kind of volume coming in. I need to see at least 2 times or more, 200% or more, right? And you can see it's already pretty, we're not down there yet, but it's not very promising. So if that touches that blue lug, or anywhere near that blue lug, I'm going to be out. And you can see this is still sitting here too. This is also very important information. Look at this. We've talked about this already. This is still here. How incredible is it that they can pick up that this order is still, it's not completed. Talk about transparency. So you know right now, okay, there was 400 here, and they're still here. It didn't execute. Once it executes, it says E. That means there's still ice here when this comes down. That's pretty important information. Which I'm going to take advantage of. If this comes down here, I'm ready to just hop out of this. I won't even wait for 30. I won't even wait for blue lug. I'll just get out because I know they're going to try to hold up the market again. Doesn't mean they will, but I'll probably get out of one of them and see if we can get down to the blue lug. But if it starts to bounce away, then I'm getting out. How incredible is it to know this? Who knows this? Do you know that looking at this? And let's see. I have no idea what's going on here. I know, hey, this looks like the market's going to die. Do I know there was 400 buy ice right here and the guy's still waiting, the firm's still waiting to buy more? That's pretty good information to know. And again, this looks like it's going to die. So all these guys that are shorting, if it comes back, they're like, yeah, we're going to go to zero. Or no, there's 2,000 buy ice there potentially, and the market's going to do that, right? That's why, yes, this stuff is important, but this trumps everything. Everything. The real-time buying. These markets are pretty dead today. So another thing you want to see here, a couple things we look at in my room as well. Everyone has access to this stuff.
Yes, someone's asking about reading the. It's not really pertinent to this webinar, but reading the TAS boxes.
Yeah, the TAS boxes, I don't trade off the TAS boxes anymore. The lugs are, TAS boxes on steroids times 10. So I have them on my chart. I used to trade off of them. But what is important, so for instance, this indicator is a TAS indicator. This is the edge. We talk about this every day. This is just showing you the mini S&P, or the S&P, and it's showing you all the stocks, the 500, how many are above their 5-minute TAS boxes, in between, or above, below. When you get markets this is the 67% line. When you get these, this means that almost 90% of the TAS or the S&P 500 stocks were below their TAS boxes. Well, when that happens, the market reverts all the time. So what I tell my room all the time is, this isn't a red light, green light. It's pretty close, but you don't want to be, it doesn't mean just buy blindly when this red pops above here, but you definitely don't want to be shorting because you get the snapbacks, right? So I'll give you an example here. This actually stayed up here for a while. And remember, we had all this nonsense Fed talk earlier too. Not nonsense, but you know what I mean, right? You had all that. This was this morning where it was hanging up there. Where was it? Bullard was speaking. And then we have, this is what you want to pay attention to too. Now at 10 o'clock, 12 o'clock Central, you have another Fed guy chirping, ECB guy chirping. Oh, there's another one here at 1:45. This is after the close, but I just cannot remember in my trading career that this happening. It's unbelievable. You can't see yesterday. I was going to show you yesterday. It was like 15 guys, it felt like. This guy's still talking, by the way. How long could you talk? He started at like, what time did he start? Where are we at here? 6:30. He's been talking for 2 hours. Crazy. So anyway, what I was showing you here, let's see what time this was. This was 10:15 Eastern. So that's 7:15 my time. It was oversold. It was right after we got on the webinar, right? Let's see what happened at 7:15. I'm going to bet. I already know what happened because I got stopped out of my trade, but let's look. Right around there. Right there. It popped. Everything made a lower low. Gone. It usually just does this right away, but it did hang around. Remember, the guy was still talking. He's still talking, but that's just a great way to monitor whether we're oversold or not. So you're not, the minimum, you're not initiating short positions. This was another error on my part. So I've been making a lot of errors lately. This is one. So this was oversold. Why was I selling into that? Remember, I added. If anything, I should not have added, and I should have been ready to get out. I added, and this thing was oversold, and this is what that looked like. So I just cost myself. This was a losing trade for no reason. Now that I look, I just wasn't looking at it. I had so much going on. So let's see what time it was when I added to the trade. Look at that. Was that right at 7:15? Oh, it sure was. So this, guys, trading's hard enough. You can't be making error. I'm talking to myself. This is an F. This is an F minus. What am I doing? I just didn't look at it. That's what I was doing. There is no way I would have added to this trade when that market was oversold like that. And I probably would have been out. I would have just said, I'm going to make an exception here. If this pops above this zone, I'm out of my trade. Instead, I carry 6 all the way back up to 53, which was another, 15 points away. So this was just completely avoidable just by looking at that edge product, right? So this is a TAS product. You can see it in my room. This is not available to the public right now. I don't know why, but it's not, but you can see it in my room. But that was an error. I just cost myself a losing trade for absolutely no reason. I would have never added to that trade. So all I talk about in my room is to keep an eye on that thing. So I get an F as well. So that was the tangent about the TAS boxes. I don't use them to trade off of, but I do watch that edge product. All right, let's check our NASDAQ trade. Now I'm getting upset that I did that. That's not acceptable. Pretty much. This guy is still talking.
I'm expecting the results for the US 4-week bill auction on the 50 bits cover.
All right. So it's just bouncing around here probably until the next Fed guy, an hour and a half. We'll see. Still not filled on this. So again, the edge is not, now I can't enter trades on that. That's sickening. I missed that, but you see this is like nothing. You can see it's just basically the majority of the stocks are right in the middle of their boxes. So nothing's overbought, oversold. This is just F. If someone was here, I would tell them to punch me for doing that. That's just not acceptable. So you guys see, I'm human. I make mistakes nonstop. I've been doing this forever. It's all I do is stare at screens for 9 hours a day. And I still make mistakes. I mean, granted, I'm on the webinar and I'm trying to watch a lot of stuff, but that's no excuse. That's one of the number one things I look at to make sure I'm not initiating trades when the thing's oversold or overbought.
Now, Scott, that's one of the aspects like in this webinar. It's really great. I mean, we see you take winners, and then when there are mistakes or some of the losers, it's real. I mean, you're going over it. You're saying that this is learn from my mistakes or learn from what I did wrong here, and this is you have to accept this is trading. This is normal in trading, and it's fantastic. It's very, very transparent, and it's much appreciated.
Sure. I mean, that's what I tell my room every day. It's like and you guys too. You're seeing me in raw form. Like this is not, like most educators showing you, you know, they're not trading off the right side of the chart. They're scrolling back, 4 hours and saying, "Oh, this was a great long here. This is a great short." I'm doing this real time, and I'm trying to cover all these markets. And so I'm not making excuses. I'm just telling you, it's difficult. And you see me in raw form, right? And you're in my room. I'm doing it twice a day, every day. They see everything. They see my temper tantrums, my complaining, because I'm a real person. I'm an emotional person. I'm a competitive person. But doing the webinars does keep me in check, and that's why I love doing them, because it helps me, one, to talk things out. It helps me think clearer, and it helps me from breaking screens and making a complete moron of myself most days, because I've got to have some kind of respectability, right? So that's why I love doing the webinars, because it kind of keeps me in check. But I still go off the rails sometimes, and I still, the oh woe is me, the market's against me, so on and so forth, because I'm a human, right? And it's just, and I'm trying to get better at it. We're talking in my room. I'll give it to you guys too. I usually reserve this stuff in my room, but this stuff's very important. You can actually see it right here. You can see this. I was actually going back over. I haven't listened to this in a few years. I actually had, so this guy is called Neville Goddard. This has nothing to do with trading. It has to do with the way you think, right? Very, very important, because you create, and you guys may think this is hocus pocus. What this is, the current form, is The Secret. So the chick that did The Secret, she basically stole this information from this guy. This was made in like the 50s or 60s, right? So what it is it teaches you how to think. And I was referred to that by a $1 million trader, a guy who was a multi-million-dollar trader, said, hey, check out this book. I did the audio book. You can buy it. You can read it as well. He said, check it out. And what it is, it's not about positive thinking. It's about thinking like you're already there, right? So how would you think right now, all of you guys on this webinar, if you were a $1 million trader, millions of dollars, you can literally just turn off the screens right now and jump on your private jet and fly somewhere. Like, what would that feel like to you? So the whole key is not thinking, hoping for something. It's like you're already there, right? And if you keep acting like it's already present in your life, then it finally materializes, or what's the word they use? I can't think of the word. Manifests, right? So I know it sounds crazy, but when you listen to it and you really start thinking about it, you're like, oh, you basically make your universe, you make your life by how your mind works. So what I was telling my room is, and he's got two books, the Law and the Promises. The other one is Thinking is Feeling, or something. Just Google his name, Neville Goddard. So what I was telling my room is, I've been going through a bad stretch of making mistakes, getting ticked out, stuff, so on and so forth. And I said, you know what? The reason I think this is happening to me is because I've fallen back into my old ways, where it's the negative feeling, negative thoughts, thinking something bad's going to happen, saying it to the universe, like, I guarantee this is a loser, or I'm going to get ticked here, stuff like that. I still have to fight against doing it. But I'm telling you, when that guy told me this was, guess when this was, when this guy told me to listen to that book, it was right around 2017. He told me to do it. I listened to both the books. I started to do it. All of a sudden, Brett Steenberger contacts me about Bookmap. I'm back, right? I swear to God, that's exactly how it went down. I was, every day in the doctor's office, kissing the doctor's ass, trying to make sales, because I had to get out of the business because I couldn't make money, because I didn't have an edge, right? And then I did that. I started thinking differently. I started feeling like I was a multi-million-dollar trader again. Literally out of the blue, Dr. Brett contacts me about Bookmap. The rest is history. So I swear on my life, that's exactly how it happened. So if you are struggling, or you have the negative self-talk, those books and listen to them. It may sound corny. I'm telling you, it turned everything around for me, and that's why I'm on here with you right now. So
yeah, we may have to do another, like we did a webinar some years ago with a kind of a conversation with you and Brett, which was awesome. Maybe we'll see if we can arrange something like that again. I don't know if he'd be interested, but yeah, I thought it was really cool.
he's very busy. I'll talk to him. He works with solely hedge funds now, but I can run it by him and see if he wants to do another one. He didn't tell me about the book. A multi-million-dollar trader told me about the book.
Right.
But the point is, and again, it's not just wishful thinking. You have to feel it and act like it's already happening. But it's not. I'm telling you, it's not hocus pocus, and it's the most important thing I've ever done. So, and yes, I have my rules in trading, and I try to follow them to where I'm not using emotion. But you'd be surprised how many mistakes you start to make when you start to think negatively. And that's why I started bringing it up to my room. Like, you know what? I have not listened to these books in a couple of years. This stuff's starting to happen again. I'm finding myself talking negative nonstop. Guys, the mental part of trading is probably the most important part, as most of you already know. So that's my advice to you, is to listen to those books. I am, sitting in this trade. My stops in, if it stops me out, move on. Other than that, I'm watching down here where this volume event occurred, where this ice is still sitting in here, as you can see, waiting for more. And then the blue lug. This is actually canceled. That's where I was going to add to that trade, or put that trade on initially. Other than that, I'd be careful. More Fed talk at noon, and ECB at noon Central. So other than that, we just put on this trade today, which I should have never. This should have been a winner. I should have been out, and I should have never added. That was a mistake. But other than that, pretty dead day. So hopefully you guys at least learned something. If anything, you take away is read those books first and foremost. Would be my advice to you. Other than that, I do this twice a day in my trading room. You get the spreadsheet, everything else that we're working on, the new trade. It's pretty incredible as well. So that's all I got for you, Bruce.
That's plenty. Excellent. Yeah, thank you, Scott. And let's see, miss the author. What's the author again? Neville Goddard, is that correct?
Literally, just Google his name, Neville Goddard. Law and the Promise, I think, was his first book, and then I think Feeling is the Secret, or not Feeling is, I can't remember. Here, it's right here.
Okay.
I got logged out. Just Google his name.
Yeah, I think that's enough. People will get it there. So if you need that information, and you can always this will be, it's recorded. It'll be up immediately here. So anyway, thank you, Scott. Excellent, and we owe you your slot back from last weekend or last week. So we'll do a special event with you soon, yeah, look forward to the next event.
Awesome. Thanks for having me, and I'll see you guys next week.
All right. Thank you, everybody.
Thanks.
Bye.